to the program Gyan Se Kalyan. My dear friend, myself Dr. Baidyanath Ram Prajapati, Associate Professor. We are discussing the basics of accounting with terms used in accounting with the question answer. So today we are going to understand the various terms and the words which are very much useful to understand the accounting basic. So the first one is very important. What is account? What do you mean by an account? So here, financial records of an organization that registers all financial transactions and must be kept in its principal office or a place of business, and the book which are used to record the transactions and the various informations relating to an organization is called an account. So here example is cash account, sales account, receivable account. So these all accounts records various information. So next one is what is accounting. So the process of identifying, measuring and reporting financial information of an entity is called accounting, or accounting is also called language of the business. So my dear friend, we all know we are conveying our message, we are discussing with each other, we are sharing our feelings. So what we are doing? We are just passing the information what we have, and we are getting the information what the other has. So here some of the examples are: Rama started business with capital 1 lakh. So there is two content. That is the cash which is introduced in the business in the form of capital. So whatever the amount introduced by the owner is called capital. So this is one transactions. So another one is what is accounting cycle. So here a term that describes the steps when processing transactions like analyzing, journalizing, posting, preparing trial balance, adjusting, preparing financial statement, manually accounting. So these all are the steps, and these all are goes round and round, time and again. We are repeating every year, every day, 6 months, like that. So this is the process of accounting. So here one example is given with the help of an accounting equation, that is assets is equal to capital plus liability, or liability plus equity is equal to assets. So what are the 9 steps in accounting cycles? So here there are 9 steps which are involving in an accounting cycle. So first one is collection and analyzing of data, putting transaction into journal entries. So there are basic rule of journal entry. For this purpose we are dividing whole of the account in 3 parts, that is personal account, real account, nominal account. Under the personal account, the rule is debit the receiver and credit the giver. Under the real account, debit what comes in and credit what goes out. And under the nominal account, all the expenses and losses are debited, and all the income and gains are credited. So the third stage is posting. We are summarizing the transaction, we are making the ledger, and after the ledger again we are taking the balances and preparing a statement that is known as trial balance. And after preparation of that, there are some mistakes or error and some items are left. We are adjusting that, and we are preparing the adjusted trial balance. And after the adjusted trial balance, we are preparing 3 basic statement, that is trading account, profit and loss account, and balance sheet. For this we are making the closing entry. So another very important term is what is accounting equation. Accounting equation, debit must equal to credit, and we have seen earlier that assets must be equal to capital plus liability. Now we are coming to what is accounting principle. So there are general rules and concepts that governs the field of accounting. The general rule referred to as basic accounting principle, and these are the guidelines which form the groundwork on which the more detailed, complicated, and legalistic accounting rules are based. So here some of the accounting standards, rules, guidelines, industry-specific requirement for financial reporting. So the phrase we all know, generally accepted accounting principle, that is GAAP. Another is who are creditors? The person to whom we have sold the good, from whom we have purchased the goods on credit are known as creditor. The debtor to whom on credit we have sold the goods are known as debit. Stock, the stock in hand, this is also known as inventory. So here some finished goods, semi-finished goods, spare parts which are lying in hand at the end of the year is called stock. Purchases. Purchases means the raw material which is to be converted into output. It may be on cash or on credit. So next one is what is drawing. For the personal use, the owner is taking out money from the business, that is called drawing. And goods, it refers to the product which is meant for reselling purposes, for making the profit. What is voucher? This is the fundamental and the basic evidence and documents for entering into the journal and cash book. So here when we are buying the goods, we are receiving the cash memo or bills, and in case of when we are depositing the cash into bank, we are making pay in slip. Discount is deducted in the price of the goods sold. So there are two types of the discount, the cash discount and the trade discount. Trade discount is deducted from the bill, but the cash discount is recorded in the journal entries separately. Cash discount is given for receiving the prompt cash, and the credit discount to boost up, to sell more and more. Another, what is capital? Amount introduced by the owner is called capital. Sales are the total revenue. It may be cash or credit. What is revenue? These are the amounts of business earned by selling its product or producing or providing services to customer, called sales or revenue. Expensive. For earning the revenue, we are incurring the money. So this is called expenses. What is accounting? Accounting as the art of recording, classifying, summarizing in a significant manner, and in terms of money, transactions and events which are in part of list, financial character, and interpreting the results thereof. This is defined by the American Accounting Association. So there are some aspects of the definition. We can take out some important points. The first one, there must be economic event or the items. Next one is identification, measurement, recording, and communication. There must be an organization. So these all accounting treatment we are doing for an organization. There are some interested users who are interested in these all information which is provided by the accounting records. So another one, who is shareholder or owner, so getting satisfactory result. So the owner is interested for accounting information because he has invested the money. Next one, a director, manager who are managing the business, so they want to know the performance. The creditor who has supplied goods and services on credit, so they want repayment. Prospective investors who has invested money in the business, so they want to know how much there is profit. The government regulatory authority, they are very much interested to take revenue or taxes. So investors and potential investors are the external users, unions and employees group, lenders and financial institutions, competitors, supplier and creditors, customers, government, regulatory authority, social responsibility group, and there are another group, they are the researcher who are very much related to accounting information. So these all are the external users. What are the role of an accountant? To observe, screen and reorganize events and transactions, to measure and process them, compile them, make report and give it to the users, and information is communicated to the outside users. So these are then interpreted, decoded and used by management and the other groups. What is expenditure? Spending money or incurring liability for some benefit, services or property. Property received is called expenditure. Here example, purchase of goods, machinery, furniture. What we are finding? So expenditure can be capital expenditure or revenue expenditure. Capital expenditure are purchased for long-term assets, that is fixed assets, and revenue expenditure are incurred to maintain the productivity, recurring expenses. What is profit? Gross sale or net sale minus cost of goods sold is the profit, or excess of revenue over expenditure is called revenue. So another very important term is what is financial accounting, management accounting and cost accounts. My dear friend, these are three sub-disciplines of account. So when the business volume becomes very high, in case of the big organization where millions of transactions are happening, so in a set-top box we cannot record all the transactions. So for different purposes we are dividing the main book in three parts. Cost accounting, which is meant to record all the cost incurred for production, and management accounting, the information required for decision making. For that purposes, we are recording, that is called management accounting, and financial accounting. All the systematic record of financial transactions are recorded. So another very important qualitative characteristics of accounting information. So there are two types of the accounting information, quantitative and qualitative. So here we are going to discuss the qualitative characteristics. First one is reliability. Second one is relevance. Third one is understandability, comparability. So these all are the very important. Reliability means user must able to depend on the information. Relevance, it must available in time. Understand, it must be understood by the common man. And comparability, it must be comparable within other organization, within the same organization, within the different period of time. So objective of accounting, and what are the role of accounting, and as an account information system, the basic objective of accounting is to provide useful information to the interested party. So here role is given, describes and analyze a mass of data of an enterprise through measurement, classification and summarization, and reduces those data into report, and reduce those data and it convert into financial statement, that is trading and profit and loss account and balancing. Trade is when profit and loss account is prepared to judge, to see, to know the performance of business, and to know the financial position. We are preparing financial statement, that is called balance sheet. So here is the correct answer. It's very small question is provided for your understanding. So test yourself. Next term, what are assets? It is defined as resources or thing of valuable and owned by company. Example, cash, bank, plant, machinery, furniture, fixture, etc. What is gross profit? Net sale minus cost of goods sold is gross profit. What is an accounting period? My dear friend, whole of the business life is divided in different segment of time, say 1 year. It may start from the 1st April and end on 31st of the March. It is called an accounting period. So we are judging our performance within this period. All the transactions which has done under these periods are recorded. What are revenue expenses? These are the amount. So here revenue and expenses. Revenue means the amount earned through the sale of goods and providing services. Expenses, this include cost of goods sold, selling, distribution, administrative expenses, interest expenses, etc. So these all are incurred to earn money, earn revenue. Sales refers to revenue earned when a company sells its goods, product, merchandise, etc. What is T account? So we are making the ledger in the T form. So there are debit side and credit side are shown and balance. So this is known as T account. So my dear friend, we are proceeding to the another question. What are the golden rule of journal entry? So for the journal entry purposes, we are dividing whole of the account under three parts: personal account, real account, and nominal account. Under the personal account, debit the receivers and credit the giver. And under real account, debit what comes in and credit what goes out. Nominal account, debit all expenses and losses and credit all incomes and gains. So you must remember this is the fundamental, and this is the thumb rule of accounting. What is bookkeeping? Prior to computer and software, the bookkeeping is small businesses usually begin the writing entries into journals. So this is the first step of accounting. Under bookkeeping, we are recording the transaction scientifically and systematically. So what is journal? It is defined as the books of original entry. In order to reduce the amount of writing in general and other books, we are making the journals. So there are some subsidiary books to help the main book. So this may be day book, sales book, purchase book, bill receivable book, bills payable book, etc. So another is what is accounting? It is the process of recording and summarizing financial information. What are direct expenses which are incurred to produce the goods and services and which is related to the purchase of raw material? What is balance sheet? It is the statement of assets and liabilities prepared at the end to show the financial position of the business. What are indirect expenses? All the expenses debited in profit and loss account is known as indirect expenses. In other words, we can say which are not involved directly in producing the goods and services. What is net profit? Gross profit minus all indirect expenses is known as net profit. What are real assets? My dear friend, all the fixed assets are known as real estate which have some market value like building, plant, machinery, stock, debtor. This may be divided into two parts: permanent fixed assets or tangible fixed assets and intangible fixed assets. What are tangible fixed assets? Which can be touched, seen, which have physical shape like plant, machinery, furniture, fixture. Intangible assets which cannot be seen, touched, only felt, called intangible assets like goodwill, patent right, trademarks, etc. What are fictitious assets? Very important. Having no market value are called fictitious assets like preliminary expenses, loss on issue of shares, etc. Another is fixed or long-term liabilities. The liabilities which are payable after a long period of time. say after 1 year, like debenture, loan on mortgage, equity capital, etc. What are business event? Very important. It is also called business transactions like sale, purchase, etc. Current or short term liabilities, those liabilities which are payable within a year or within very short period, like creditors, bills payable, bank overdraft, outstanding expenses, etc. It may be divided into two parts: deferred liability and liquid liability. The deferred liability, which can be postponed more than 1 month, and quick liability, debts repayable in the course of a month, called liquid, or within a year, like outstanding expenses, creditors, etc. But a journal entry is the first step in accounting cycle used to record all business transaction event in the accounting system. So expenses are the cost incurred to generate revenue. What is double entry system or accounting? Double entry accounting, also called double entry bookkeeping. Under this system, every transaction required two-side recording. At least two accounts are maintained. This is same concept behind accounting equation. Debit must be equal to credit and assets must be equal to capital plus liabilities. Operating expense includes all that are incurred to generate operating revenue, like mercantile sale, etc. Example: rent, wages, advertising. So what are non-operating expenses? It cannot be linked with bank operating revenue. Interest expenses is the most common example. These revenue account, so these are the income account. So on assets earned by a company, operation, business activity. In other words, we can say cash or receivable received by company for sale of goods and services, sales, rent, consulting services. These all are the very simple example of revenue account. So non-operating revenue or other income. So interest income is known as non-operating income because this is not earned under rev operation. What is accounting equation? So earlier we have seen accounting equation is the two-fold accounting system where debit is always credit to income or debit always equal to credit. So my dear friend, what we owe, we must own. The accounting equation equates company assets and its liability and equity. My dear friend, you must remember these all the terms. Thank you very much.